Charter Hall is one of Australia's largest fully integrated property groups. We have over $20 billion of capital under management, and we have 26 years of history of generating outperformance for our investors. The types of assets that we invest into cut across the property spheres of industrial, office, retail and hotels. Our success has been driven from a large team of highly motivated and successful property professionals. At Charter Hall, we manage other people's capital as if it's our own. In fact, in almost all cases, Charter Hall Group will have money invested in our funds, or senior management or the board of directors will be invested. That creates a good sense of alignment and focused on the right outcomes. The Charter Hall Direct PFA Fund has a focus on providing our investors with strong, sustainable and tax-advantaged income over the medium to long term. In addition, we're always looking to provide some capital growth over the term of the investment. We do this by focusing on Australian office properties that typically have a focus on government tenants or other highly rated corporate entities. The investment strategy of the fund is to invest into Australian office properties in emerging or established office markets over the medium to long term. We'll look to grow the portfolio so there's greater diversification and constantly improve the quality of the assets. But part of it is also we will sell assets when we believe the asset value has been maximised for our investors. At Charter Hall, we also strongly believe in active asset management, and what this means is leasing opportunities, taking them early, smart capital management, capital improvements, and having a defined exit strategy for each asset that we buy. When considering a property for any portfolio in a Charter Hall managed fund, rigorous external due diligence is undertaken. So independent valuations, external lawyers, quantity surveyors, technical due diligence. There are also criteria that we consider: location of the property, quality of the tenant, how it fits within the general portfolio mix. However, for the PFA fund, specifically what we consider is that the property must be A or B grade and have a focus on a government or highly rated corporate entity, and of course, the office asset is a key requirement. Diversification is a key benefit for investors when you consider the PFA fund. Currently, the fund is invested across 6 Australian office markets, and that level of diversification is something that can't be matched by a single asset or a single tenant property syndicate. The fund focuses on having a gearing range or a debt level of 30 to 45%. We believe that's a prudent level, and it balances off the extra returns you can generate as well as taking on the additional risk. Be wary of any property funds that you see that have a 50% or more gearing level, as in our view, this is an unacceptable level of risk for investors to take. At the liquidity event, it means investors get a choice on what they would like to do. So at Charter Hall, what we do is we write to investors and they simply need to tell us, do they wish to redeem their holding? Would they like to roll their investment for another 5 years? Or would they like to do a partial redemption, so something in between? The important thing is it provides liquidity certainty for our investors, and liquidity is delivered at their election. When providing that liquidity for investors, there are a number of things that we consider at Charter Hall. The first is whether we should sell an asset to make that capital available. The second is, should we raise new capital to allow people to exit? And the third is, where are we at in the gearing range? And we will draw down debt, provided that the fund stays within its gearing range as outlined in the PDS. Or obviously, we can do a combination of all three. When looking at capital growth from an unlisted property fund, that's primarily generated from the assets you select in the first place. And as well at Charter Hall, what we do is we do capital management, active leasing, and strategic asset reviews, which also contribute to that capital return over the term of the investment. Additionally, all our properties are independently valued on a 12-month basis from a high-quality external firm. We report our returns generated to investors on a quarterly basis through our website and through our quarterly report that's sent to all investors. The key feature of the PFA strategy is to invest into Australian commercial office properties. What sets this fund apart from other office properties that are in the market is its focus on government tenants as well as other highly rated corporate entities. This provides strong security of income to investors and means they can be more certain of the income distributions they will receive, not just now, but also into the future.